Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about CHINA COMM CONS interim report. China Communications Construction Company Limited offers a diverse range of businesses and services across various regions. These include infrastructure construction, ports, roads and bridges, railways, water conservancy, urban rail transit, municipal infrastructures, building construction infrastructure design, consulting, planning, feasibility study, survey and design, engineering consultancy, project management, supervision, contracting, dredging business. Infrastructure dredging, maintenance dredging, environmental dredging, reclamation, watershed management. The company operates in multiple regions including mainland China, Australia, Hong Kong, Africa, the Middle East, and Southeast Asia. The China Communications Construction Company's stock price has increased slightly in the past year due to several positive developments. The company reported a 3.14% growth in new contracts in Q2 2025, driven by port construction and other business segments. Its release of the 2024 ESG report showcased advancements in technological innovation and environmental sustainability, enhancing its image among investors. Additionally, CCCC completed significant projects, including the Shenzhen-Zhongshan Link and Phase II of Lianyungang Port, and received numerous awards for quality development and technological innovation. The company's continued involvement in the Belt and Road Initiative, with over 3,000 infrastructure projects across 158 countries, also contributed to its growth. Furthermore, CCCC announced an equity buyback program worth CNY 1,000 million, signaling management's confidence in the company's valuation. These factors have collectively contributed to a positive stock performance, with 8 shares experiencing a plus 8.37% change over the past year. The primary drivers of revenue growth or decline can be identified through an analysis of the financial summary provided. On the growth side, infrastructure construction business, particularly port construction and urban construction, have contributed significantly with a growth rate of plus 15.9% and plus 7.3%, respectively. The other businesses have also seen a notable increase of plus 14.9%. In addition, emerging business sectors in the infrastructure design business have shown promising results. On the decline side, infrastructure design business has experienced a significant drop of minus 25.4%, while dredging business has declined by minus 13.1%. Railway construction and road and bridge construction have also seen substantial declines of minus 66.1% and minus 3.9%, respectively. The revenue from provision of construction services with fellow subsidiaries has decreased by RMB 868 million, and the sale of goods with fellow subsidiaries has dropped to RMB 35 million. Overall, the growth in infrastructure construction business and emerging sectors in design business have been key drivers of revenue growth, while declines in infrastructure design, dredging, railway construction, and road and bridge construction have contributed to revenue decline. Net income and profit margins experienced a decline in 2025. Net income decreased by as much as 16.9% to RMB 9,990 million and 14.7%. Profit margins also saw a decrease, with gross profit margin dropping from 11.7% to 10.7%, operating profit margin decreasing from 5.8% to 5.1%, and segment result margin falling to 4.9% from 5.4%. The reasons behind this decline are attributed to several factors. Losses on certain projects contributed significantly, as did the increase in provision for impairment of contract assets and trade and other receivables. Additionally, a decrease in high-profit margin projects within the infrastructure design business also played a role. A one-time gain from the disposal of subsidiaries and foreign exchange gains in 2025 further exacerbated the decline. These factors collectively led to the decrease in net income and profit margins in 2025. The company's financial performance indicates a significant issue with its operating cash flow. Despite multiple references to the same problem, it is clear that the company is struggling to generate positive operating cash flow. The negative net operating cash flow, as stated on page 43 and page 50, is attributed to segment results being negative. This trend continues throughout the financial summary, with operating cash flow status remaining negative, page 51. Specifically, for the 6 months ended June 2025, the company reported a staggering loss of RMB 83,351 million in operating cash flow, page 67, further emphasizing the severity of this issue. Overall, the data suggests that the company is not generating sufficient positive operating cash flow to sustain its operations. The company's debt level has seen a significant increase of 20% over the past year, with total borrowings rising from RMB 586,323 million to RMB 703,890 million as of June 30, 2025. This represents a 20.6% change in total debt level compared to December 31, 2024. In contrast, interest expenses have decreased by 8.6%, with net finance costs dropping from RMB 11,577 million to RMB 10,574 million over the same period. The decrease in interest expenses is a notable trend, despite the substantial increase in debt levels. The company's financial summary highlights both successes and challenges across various segments and regions. Notably, the design and dredging segments have performed well, demonstrating strong growth and stability. Additionally, the China construction segment has also shown impressive performance. On the other hand, the construction segment's performance is unclear, indicating potential issues that need to be addressed. Furthermore, the others category and eliminations have underperformed, contributing to overall financial concerns. Management is optimistic about the company's outlook, emphasizing the pursuit of annual targets and long-term goals outlined in the 14th Five-Year Plan. Key areas of focus include capacity building, high-quality development, unlocking new growth domains, optimizing overseas operations, and improving efficiency. To achieve these objectives, management plans to accelerate innovation, technological advancement, and value-oriented investments. The company will prioritize strategic emerging industries, such as smart highways and intelligent ports, through increased R&D investment and mergers and acquisitions. Management aims to enhance valuation by focusing on core business, optimizing strategic layout, and strengthening shareholder returns. A long-term goal is to raise investment value through an improving quality, increasing efficiency, and enhancing returns action plan. Overall, management's strategy centers around driving growth, innovation, and efficiency, while enhancing the company's value and competitiveness in key industries. There were no notable acquisitions or divestitures in this period. The company's financial strategy focused on organic growth and internal development rather than external transactions. The company's financial summary reveals that it has engaged in both dividend payments and share buybacks. Specifically, the company has a history of paying dividends, with further details available on page 65. Additionally, the company has also bought back shares, with more information provided on page 134. This indicates that the company is committed to returning value to its shareholders through both cash distributions and share repurchases. Concerns about inventory buildup and potential supply chain disruptions are present in the financial summary. Specifically, pages 3, 80, and 92 highlight these concerns. On page 3, backlog values contribute to worries about inventory buildup or supply chain disruption. Page 80 specifically mentions a concern over inventory buildup, but does not mention supply chain disruption. Meanwhile, page 92 notes that increases in various categories of inventory, including raw materials and finished goods, are contributing to inventory buildup concerns. That concludes the financial summary for China COM CONS. Feel free to comment below, and I will be happy to answer them when possible.